Okay, so we're good to go live. A very warm welcome, Alan, to the first of many, hopefully, sessions on Pakistan and hashtag emerging Pakistan, as we like to call it. Very, very interesting market, obviously, for us, but also from your perspective, sitting outside, having compared Pakistan with so many of the other emerging markets that you've been a part of. So you bring a very unique viewpoint to the way you look at Pakistan, and hopefully that's what we can share with the audience today. So I think before we get into the catalyst part, I'll just hand over to you for just a very brief intro of yourself and obviously Endeavor and what Catalyst is doing in the region.
Sure. Yeah, I really appreciate the invitation. It's great to be here, and thanks everybody for listening in, and for folks listening later. Thanks for listening to the recording. My name's Alan Taylor. I am American, obvious enough from the accent. I live here in California. I run the Endeavor office in Silicon Valley, and I grew up here in California, but I have spent the last 20 years actually working on emerging markets. And I've spent 18 of those years at Endeavor, helping kind of promote this mission all around the world of supporting, mentoring, coaching, the very best entrepreneurs across Latin America, Asia, Africa, the Middle East, including now even some parts of Europe and the United States that we consider kind of underserved regions. And so we do this work all around the world. But for the last 12 years, I've also been the managing director of Endeavor Catalyst, which is an emerging market-focused venture fund that we built on top of Endeavor. And so, Sharia, today we'll probably talk about both things, right? Endeavor is this big global organization that we've built over the last 27 years. Today we're in 40 countries. We have more than 600 full-time team members, right? We can talk about the work that we do there. But then my other vantage point and kind of lens on all of this is as a venture capitalist and a global investor, where we can invest really anywhere in the world, all across the Americas, Asia, Africa, etc. And I'll talk in particular, I guess, why I'm excited about Pakistan and both having Endeavor there and supporting companies there, but also investing. I guess to finish the introduction, Endeavor Catalyst, the fund, is now today 12 years old. It's about $500 million in assets under management across 4 funds. We're investing now to Fund 4. That's a $290 million fund. We've invested in more than 300 Endeavor companies now all around the world. And about 54 of those have grown up to be billion-dollar businesses. So you can do the math. It's about 1 out of 6. So it works. So this idea that you can build really big, meaningful companies in emerging and frontier markets is one not only that I believe in, but that I've seen happen, and we've seen it as investors. Our very first fund is about an 8x, 8.5x multiple on invested capital, right? Cash on cash returned, DPI, like actually distributed back, fully returned. So we've proven that, not only is this an incredible mission that Endeavor has to create the jobs of tomorrow, right? Create economic opportunity through helping entrepreneurs, but actually it's a great investment opportunity too that we've seen with Endeavor Catalyst.
Wonderful, wonderful. I think that was a great summary with some of the key and surprising actually numbers that usually aren't that good. So I'll come back to that
Sure.
in the conversation. I think just to lay the context for the people who are watching live right now, today's session we'll do about 45 minutes where we'll cover some of the topics that we feel are important for this audience, and then we'll have about 15 minutes at the end for Q&A. So as Ali just mentioned, that while you're watching, please feel free to add your Q&A in the chat, and the team will filter that through and share those with us at the end. Even in terms of the conversation, just to lay the context of where we want to go with this today, this is not about Endeavor, or this is not just about telling you how Catalyst works. But the lens that we'll use for today's chat is basically how people like Alan and how funds outside Pakistan view emerging markets like ours, and how they see the last 3-4 years and the frenzy of activity that's happened, and now the markets slow down. Because these are the people with a long-term view on Pakistan. And Alan and obviously Endeavor and Catalyst are kind of different from all the other sort of seasonal investors that plowed into Pakistan in an overheated market, because they have a very long-term view on such markets. And they've seen this play out in almost now 43 countries in terms of Endeavor being active in those countries. I'm not just complimenting Endeavor because I represent Endeavor, but I think that uniqueness needs to be understood of what the lens is that people are using to invest in Pakistan and the gaps that they're seeing, and also the similarities that they're seeing with other similar markets. So Alan, I'll start with that actually. I've heard you have a time machine in a secret room at headquarters where you can just kind of predict where these markets are going, and you're very on point in terms of where the Pakistani ecosystem is headed, and you've got these great insights. So what's that time machine, and what's the source of that data that you get that a lot of people over here sort of miss? Because, for us, the last 3-4 years, this was the first sort of bullish market for us. And
Right.
this was our first taste of actually foreign VCs investing directly in Pakistan. Even people in the ecosystem like myself, who, as a VC, we were local VCs investing in Pakistan. We never expected, the Tiger Globals and the Kleiner Perkins to come into Pakistan so quickly. And we were also surprised. So with that context in mind, how do you see that time machine lens of Pakistan being on the same path as some of the other emerging markets? I think let's start with that.
Yeah, and look, it's a great lens, and we, the head global HQ is in New York, so anyone wants to see the time machine, just come on by, and we can. No, it's more this idea that because we've been doing emerging markets for 27 years, we can see the way this has played out. You can study China and you can study India, but candidly, the markets that Endeavor has really seen this in, I think, are even more relevant to Pakistan's story as we watch this play out in Brazil and in Indonesia, and to some degree is playing out in Mexico and some of the other markets in Latin America, in Vietnam and some of the other markets in Southeast Asia, and increasingly now in a few of the markets in Sub-Saharan Africa, like Nigeria, and then of course in North Africa, like Egypt. But you can kind of group the world into, there's only a handful of countries with 200 million people or more, or even if you want to do 100 million people or more, you're only talking about 12, 13, 14 countries. And then in the emerging economies, you kind of can then study and look at, okay, well, based on demographics and based on innovation and based on basically our fundamental belief that there is amazing talent everywhere, right? That's part of this, is that the raw kind of human capital and human potential is globally distributed. What is not well distributed are the networks of know-how, of knowledge, and frankly, of what I'll call smart connected capital that can help turn that kind of raw human potential into big companies, right? And that's essentially what Endeavor is in the business of doing. But that's been our vantage point of how, through which we've kind of looked at these other markets over time. And, Sherry, we were chatting the other day about this idea that I first came to Pakistan in person 2018, right? So that's 6 years ago, before the 2021 hype and run up and everything. And I said, hey, look, this looks like something we've seen before, right? It felt like Brazil 20 years ago, right? Or Indonesia 10 or 12 years ago, or maybe, Egypt or Nigeria a couple of years before that. So you could tell that there was something starting to happen. And that meant entrepreneurs starting to build, real companies within the technology sector. To be clear, there's always been amazing entrepreneurs in all these markets building companies. What's new is that people are now building tech and tech-enabled businesses that are appropriate to be backed by venture capital and that can actually scale very, very quickly. And this is a definition, I think, Reid Hoffman provides a pretty good one. That's the co-founder of LinkedIn. He's also the chairman of our fund and sits on Endeavor's board. So we're lucky to get to interact with Reid a lot. But he talks about this concept of blitz scaling, right? Of like really growing a company very, very fast. And that's a relatively new phenomenon in most emerging markets. But to just tell two example stories to your question, Endeavor opened up in Brazil in the year 2000. And we were early. I mean, we were too early, arguably, if you're thinking of venture capital type perspective. The very first VC fund in the country doesn't show up until 6 or 8 years later. And the market really didn't become a true market for high growth, high scale venture companies until probably 2011, 2012, right? So you're talking about 12 years later. But again, to your comment, we take a very long view of this, right? We're kind of thinking in decades, that over the next 10, 20, 30 years, what is possible in these places. So when Endeavor entered Brazil, there were zero big tech-enabled companies, right? It didn't exist. Unicorns didn't exist. You fast forward to today, just to give people here kind of a scope of what's possible. And Brazil's a country roughly the same size as Pakistan, right, in terms of population and things. Today, you have a business like Mercado Libre, listed on the NASDAQ. It's a $75 billion market cap business. You have Nubank listed in New York. It's a $50 billion business. It's not just the biggest digital bank in Brazil, it's the biggest digital bank in the world, right? And you have 22 unicorns, private billion-dollar companies. We've made about 50 investments with our fund, 50 in Brazil. And we'll get into this, but we're a matching fund. So every time we invest $1 or $2 million, that's bringing $10 or $20 million of other high quality capital into the market. And so it has changed a tremendous amount, but that's a 2-decade story that I'm telling you, right? It essentially is like 24 years in the making. Endeavor then, if we're using our time machine, we went to Indonesia, we opened up our office there in 2012, and in 1 decade, we've seen something similar, right? 0 unicorns to 14, publicly listed businesses in the US. And the thing I want to tell the audience is when I was in Brazil in 2007, or I was in Indonesia 10 years ago, nobody thought it would be possible to build $1 billion company or to list a company in the US. Like everybody said this was totally impossible and totally crazy. And so you will hear that a lot. And particularly in the next couple of years, we're going to hear that over and over in Pakistan. Like, well, this is crazy. Like, we thought we could do this, but we can't do this. Like, this is impossible. That will be the chorus. But I, at least in one voice, to tell you, it's totally possible. In fact, this is exactly how this happens, right? It's with really determined entrepreneurs and great teams and backers around them.
Right. No, that's I think the countries that you mentioned, it's kind of important for us to have that frame of context, because obviously you're aware of this, but just to remind everybody of that point, I think in Pakistan, we have generally a very bad habit of being fixated on India politically and economically. And they've, powered ahead and become a superpower, especially in the tech sector, because of India's IT success, we always used to end up comparing ourselves to India, but now the comparison is literally impossible, right? They've gone so far ahead that we kind of do ourselves a disservice if we compare our ecosystem with India's.
Yeah.
Right? And these countries, because geographically they're far away, Pakistanis don't end up comparing themselves with Brazil or with Mexico or with Colombia or with, LATAM per se, or some of the smaller countries in let's say, Africa and Eastern Europe, or even Indonesia and Malaysia. So our first sort of port of call outside Pakistan is the MENA region. And it's either Dubai, and now Saudi is the flavor of the year. Basically, there's a gold rush happening there. But although there's a lot of cultural overlap with the MENA region, the markets are very different from Pakistan.
Yeah.
Whenever somebody takes a deep dive and they, try and find partners in Indonesia or Malaysia or Vietnam. So lots of similarities over there, which are much more common. So even to quote you an example from the Endeavor network ourselves, when our Endeavor entrepreneurs go abroad and attend Endeavor events or even come back and they're doing Zoom calls or mentorship calls with a founder out of LATAM in Brazil who's made $1 billion unicorn doing retail for mom and pop shops. Literally 15 minutes into that conversation, the Kiryana store in Karachi has an 80% overlap with the mom and pop shop store
Right.
in Brazil.
Right.
And they're kind of shocked at the similarities of this, unicorn founder immediately getting what retail in a place like Karachi is about, right? So I think those similarities from these markets are really, really critical for us, and we need to broaden our horizon. And as Pakistani entrepreneurs, we need to look at these markets, which are much closer to us. So whenever somebody comes into Pakistan and they understand the ecosystem, people like yourself, immediately they start talking about this timeline, which is we've seen this happen in other markets. We guarantee that this will happen in Pakistan. You just need to be patient and you need to go down the same path. You guys are Indonesia minus 7 years. You guys are, Vietnam minus 5 years. You're Egypt minus 4 years. You're Bangladesh plus 2 years in some
Right.
ways. And they have all these plus minus timelines. And Pakistanis, we ourselves as founders, because this is so new to us, we're still kind of double-minded about this. It's
Yeah.
too good to be true because access to capital wasn't there and SME capital wasn't there. We didn't have the equivalent of the Silicon Valley Bank supporting startups that didn't have a property to put as collateral. We didn't have access to capital. 90% of our industry is services based and offshore services arbitrage. So we haven't really had IP creation, product creation out of Pakistan. And then one fine day, because of zero interest rates and money falling out of the sky, you literally have $350 million landing in Pakistan in 1 year and then another year, and almost $900 million in 3-4 years, and crazy valuations in a fluffy market, which has obviously now subsided. So now everybody's like, see, we told you this was a flash in the pan. This was too good to be true. The foreign dollars have fled, and there's no local capital to sustain this. And this is not going to last. So would love your opinion on that in terms of the way other markets have these generations of the first cohort of founders that the PayPal mafias and the Kareem mafias give rise to the second cohort and the third, and it's a cyclical sort of path up the mountain. So I'd love for you to comment on that.
Yeah, look, there's a couple of frameworks that are probably helpful there to mention that are intrinsically part of our business, but I think I always find it's useful to people to kind of lay them out. One, we already covered this idea of the time machine. I guess my only final comment on that is the predictions that, this is Vietnam 7 years ago or whatever, those are directionally correct, right? When folks like me or others say that, we might be wrong by 5 years, we might be wrong by 10 years, right? But we know the direction things are going in. And that was my observation, Chair, on my very first visit. This is way before Endeavor opened up in Pakistan, right? I'm part of a pre-seed and seed stage fund called Alter Global that also does emerging and frontier markets. And I came to Karachi in 2018, actually at the invitation to speak at that 021 Disrupt conference back in the day, with Alter. And I saw the potential to do exactly what's happened in these other places, right? But what I saw back then, and it's important to emphasize, was generation one, right? Like from a perspective of technology and tech-enabled businesses, because I want to acknowledge there's great family businesses and groups that have been entrepreneurial for 100 years, right? But the idea of tech and tech-enabled businesses being built for the first time, I think it was really nascent, 2018, 2019. I would have drawn a line that kind of looked like this on what it could look like, for the next decade. And then what happened in 2020 and 2021, and we'll talk about it a little bit, is in the zero interest rate environment with global pools of capital kind of going all over the place, essentially, my framework on it is going further and further out the risk curve, looking for yield. Because if you're getting 0% or even negative, you're looking for yield somewhere. Those global pools, which are very large, started to go a little bit. Again, relative to the size of the pool of capital, it wasn't a lot of money, but a little bit of money flowed into Pakistan and Nigeria and Egypt and some of these more frontier markets. And arguably that was an accelerant in the short term, but it's a little bit of a distortion in the long term to that line that I would have drawn on kind of how long this was going to take. Because frankly, like, things went too fast, not just for Pakistan, but for a lot of these places where things got overfunded too early, too quickly, without enough due diligence, et cetera, in a few instances from the global pools of capital, where my view is there's no shortcuts to this, right? Like, if you want to be an investor in Pakistan, you have to be committed for the next 10, 20, 30 years. You have to know the market. You have to understand, in Endeavor's case, it's unique because we have obviously a fantastic local team doing all the due diligence, but my framework there is it's about generations, and you can't really shortcut the generations, right? And so the first generation of companies that gets built, let's take Kareem as an example for the MENA region. Right now you have the Kareem Mafia or the network coming out of Kareem. These guys are arguably starting to be generation 2, maybe in the UAE or in Saudi, but you have founders who are from Pakistan or Egypt or other markets now building in those markets, and arguably they're generation 1, right, for their market. And in Brazil we're on generation 3, and Indonesia we're on 2 going to 3. And maybe to use the same framework, in Silicon Valley we're on like generation 11 or 12, right? Meaning of entrepreneurs having success and then paying it forward and mentoring and angel investing and helping the next generation. And there's a compounding of the human capital in this that happens over time. And so, people who look at Silicon Valley and say, oh, well, we don't have a Silicon Valley bank in Pakistan, or we don't have this or that. A lot of those things came in like generation 7, 8, 9, 10, right? They come much later in the ecosystem development. And so to your comment, I think China is an N of 1 market. I think India is an N of 1 market, meaning you can study them and learn certain things from them, but they're unique in their attributes. Whereas I think there is a ton of overlap, like learning from Brazil and Indonesia, and even to some degree Mexico, Vietnam, Turkey, Egypt, Nigeria. This is the cohort of companies where the business building, of countries where the business building looks very similar, right? And so I think thinking about those generations is one framework, and you can't really shortcut that. The second framework is really about which types of businesses get built first in all these places. And this is one Endeavor has seen very clearly play out over time. And you can map this for China and for India, but Brazil, Indonesia, everywhere. Wave 1, everybody builds consumer facing, essentially goods and services, right? So this is e-commerce, this is food delivery. You have to build the digital infrastructure to support wave 1. So you build payments and kind of basic logistics, but it's basically just delivery. And for several years, those are really the only businesses that get built in most of these geographies. Then some smart people who've worked in those companies say, hey, what if we took tech and applied it to the bigger parts of our economy? And then you start getting innovations in financial services beyond just payments. You start to get health tech, ed tech, broader transportation and logistics innovation. By the way, both enabling existing systems and disrupting them, but you kind of bring tech to the bigger parts of the economy. Longer tail of that, you get to food and beverage, agriculture, et cetera. That wave of company building is typically like 6 to 15 years, right? Like, it's a long wave before you really get to building true B2B kind of enterprise software companies. That's what I would call kind of wave 3. And then even longer before you get to building like real sort of deep tech, right? If you want to do super hard deep tech, biotech type things, that's almost like wave 4. Most emerging markets aren't even there yet, right? And so if you're mapping it from my lens, we're into wave 3 now in India, we're into wave 3 in Brazil, we're starting to be there in Indonesia. But in most of the markets we're operating in, we're in wave 2, or arguably we're still at the tail end of wave 1, where we're now just starting to go into wave 2. And that's where I would see Pakistan.
Wonderful. Yeah, that's exactly the kind of context I wanted you to give, because all of these markets have gone through these generations and it builds up over time. So,
and it's just to be clear, it's multifactorial because there's a lot of inputs there. Because there's probably entrepreneurs listening saying, "Well, I'm going to build an enterprise software company." I'm not saying you can't, right? But there are multiple things around the human talent and the financial capital available that tend to be that those get built in the later waves of ecosystem development.
right. Exactly. I was going to double down on the fact that it's definitely multifactorial, because you see, even if you take the example of, let's say, the Korean mafia, right? So now there's a visible ripple effect, or the typical Endeavor multiplier effect that we like to tout as Mudassir Shekha being an Endeavor entrepreneur, Kareem being an Endeavor company, and they've seen that ripple effect firsthand. That all of these people from Pakistan who got a first taste of stock options and making some money out of an exit, all of them are now more comfortable being angel investors, even with small ticket sizes.
Yep.
So it's not just Mudassir and the co-founders and the seniors, but literally dozens of people who are ex-Kareemers have gone on to become angel investors in Pakistani startups, right? And that was a missing layer in Pakistan, because unfortunately, like I said, our 90% of our tech ecosystem was IT services based. And those CEOs had made a lot of money, but they didn't have a structure or a channel to actually become angel investors in a local ecosystem, right? So I'd like to ask if you've seen these two things missing in some of the other markets as well, because I want to talk about the gaps. And these two gaps are, at least personally, I feel, one of the biggest pain points that are still missing. And from an Endeavor perspective as well, these two gaps are going to be a priority area for us over the next 2 years that we'll be working on filling and building out on. So gap number one is that, unfortunately, in Pakistan, there hasn't been a structured ecosystem of angel investing. We did not end up making formal syndicates. We don't have Lahore Angels, KarachiAngels.com, IslamabadAngels.com. There's no LinkedIn page or site where I can go and actually pitch to a syndicate. So whenever founders come to me and they say, we're looking for angel investors, and they've, kind of looked on LinkedIn and Googled, and there's 1.5 syndicates in all of Pakistan doing structured angel investing on a regular cadence, that's a huge thing that's missing, because there are dozens of angels, but they're very ad hoc, fragmented, not syndicated, individual angel investments under the radar. So that's gap number one. And a corollary to that is actually local family offices and large corporate groups that have really gotten into investing in the tech sector as such. And these are the two gaps that we'll be doing a lot of work trying to fill. Have you? I'm aware of these sort of gaps being filled in places like Indonesia, where the first unicorns that were made, those founders then went on and reinvested and got some of the larger groups involved. Can you shed some light on this? Because I think until this gets filled, we'll keep waiting for foreign capital to fill that gap.
Yeah.
And when the foreign investors come in, one of the first questions they ask is, who are the local VCs, who are the local angel syndicates, and who are the local family offices who are betting on their own people?
Yeah, no, for sure. And look, my framework for this one is that essentially, to build $1 billion company, you need stages of financing, right? You need angel and seed, and then you need kind of what I'll call local venture, like Series A. And then by the time you get to maybe B or C, then you have international funds, I think, investing a lot of the time. I referenced that idea that we've had more than 50 companies that we've invested in at kind of the A or the B grow up to be billion-dollar businesses. Well, on average, those guys raise money 5 times. That's the average, right? And so this takes a while, right? And you need financial partners at the different stages. And so when you're in one of these more nascent kind of entrepreneurship and venture capital ecosystems, everyone is trying to figure out, how do we build all these pieces at once, right? Kind of the different ingredients. And so for sure, Shahriar, one thing we've seen is a few early successes, like Kareem you talked about, or some of the ones in Indonesia. They do a few really good things. One, they create a role model, right? A success case that people say, hey, wait, if that can happen, if he can do it or she can do it, maybe I can do it too. Secondly, they really introduce the market in a meaningful way for the first time to the concept of equity, right? Because I don't think equity is not widely or well understood before that by the employees of all these companies. And I think that's a really, really positive thing. I have a view on your angel investment question that might actually be a little bit controversial, but the best angel networks everywhere that I've seen are actually relatively informal, meaning they're groups of friends and coworkers and people who knew each other, who like to invest together, who basically also like spending time together, right? And so if you look at Silicon Valley, there's thousands of angels, but they invest in kind of, they're WhatsApp groups, but they're like friendship clubs, basically. They're not super formal. It's not every Tuesday I go to Palo Alto Angels Network and go to my meeting, right? So I've been a part of developing more formal angel ecosystems and networks in Turkey and Mexico and Chile, in Argentina. And they kind of have mixed results, because in the end, angel investing is about, where you feel you can really add value to these younger companies, and you can write these small checks, and you're doing it with other people who you want to be doing it with. I would say that's best reserved for folks who are already in the world of technology and entrepreneurship in some way. Whereas the other part of your question is, I'm a big established family office. I'm a second or third generation, family from a traditional industry. How do I participate in this part of the economy? That's a really interesting question. And frankly, that's a big unlock in terms of number of dollars. And the hardest thing, I think, to emphasize there is that it has to be a portfolio approach. You have to get some kind of diversification. And so my advice to all families and conglomerates and groups is, yes, you can design a direct investing program, but you should also make sure that you're in a set of managers and you're an LP in some of the important local funds and ideally some of the important international funds. And the hard part about that is the feedback loops in venture capital are very long, right? So if we look at the local ecosystem in Pakistan, we have maybe 4 or 5 local VC funds. They've raised fund 1, maybe a couple of them have raised fund 2. What they actually need is to make sure those LPs who bet on them in fund 1 also invest in fund 2 and fund 3. Right? Because that's actually probably the best place to put your money if you're a local conglomerate or family, is in the professional managers. Now you can pick which ones you think are the best at it, right? But I would try to be in at least 2 or 3 of the local funds in Pakistan. Frankly, I've done that with my own money, right? In Indonesia, in Pakistan, in these places. Like, I join as a tiny LP in the best local managers because they're going to have the best kind of risk return, if you believe in the market, on getting exposure to the best early stage companies. Now, on top of that, you can build a direct investing program. But my general view for corporates and for big families is that you do better as a direct investor at the series B or C than at the seed or A, right? And so it's better to be an LP early and to be a direct investor later, frankly, into the best company that the manager you backed brings to you. So there's lots of ways to build out those different programs. I do think you should have exposure to this part of the economy. But I have a particular view, I guess, influenced by seeing this in so many places, mostly because the culture of big organizations, let's take the corporate VC example. Big corporations and little startups operate so differently that if you put $1 million into this brand new company at seed, you'll kill it eventually, basically. Like, it's very hard for those two cultures to mix.
Right. Yeah, no, I think that's a trigger that most of the family offices don't find easy to pull, which is that you need to spread your risk across 10 to 20 portfolio companies to actually
Absolutely.
get the return that you expect, because they're used to actually focusing on a vertical and kind of being a major player in that vertical. And it's not in their DNA to spread,
Yeah.
$5
Look,
million across 20 companies.
minority equity investing is a totally different sport than either building a company or doing control investing, right? And
Exactly.
so my actual experience in most of the bigger families in emerging markets is that it's actually usually not the first generation, it's the second or third generation that actually can have a basically a totally different mindset around being a minority equity investor in businesses. Um, and it takes some learning, right? And this is an apprenticeship business, so you learn it by doing it. But yeah, you're exactly right. We're mixing angel investing and kind of, corporate or family a little bit, but a lot of the same things apply. The story you hear way too often is, "Oh yeah, we tried startups, we did two of them and neither one worked," right? Which that's the expected mathematical outcome according to the probability of early stage investing, right? So my view is give it to a fund manager who's going to make 20 to 30 investments, be an LP. Or if you want to build your own in-house program, okay, then you have to hire folks and design it and make sure you have at least 10, 20, 30 different positions in companies. Because if you only have two or three, it's just too concentrated.
Right. Wonderful. So I think coming back to the over discussed issue of Pakistan's first unicorn and when that will happen, right? That's a debate that raged for the last 3 4 years, and it died down now that the market has died down. So, but it's kind of an important question for any emerging market, right? Because that's thought of as a milestone, and as you mentioned, Endeavor Catalyst has one of the best batting averages in terms of finding 50 unicorns out of a 300 company portfolio. That's like a ratio to die for any VC. So you've definitely got high quality coming in at the top of the funnel, and that's why your rate is good. But I think in Pakistan, the context that I want to give you is that, for example, when the market was heating up and we had airlift being sort of positioned on a pedestal as the company that's going to be the first unicorn out of Pakistan. And then after Airlift's implosion, everybody kind of freaked out that this was supposed to be a success story for us, right?
Mm-hmm.
And the market has died down. It's kind of understood that if a unicorn is supposed to come out of Pakistan, they can't be a Pakistan only play. And
Mm-hmm.
that's why a lot of companies are looking at the MENA region, are looking at multi regional markets. Depending on the product, obviously, for SaaS companies, it's easier to be global. For ops heavy companies like Kareem, it's kind of difficult. But the founders are now looking at 2 3 4 different regional combined plays to actually have a serious chance of becoming a unicorn.
Mm-hmm.
And I'd love for you to discuss LATAM in this case, because in LATAM, what I've seen is that although Brazil and Mexico are the larger markets, but we see a lot of unicorns that were started by founders from smaller markets
Yes.
like Colombia, Argentina, Chile, Uruguay. And those guys were much more scrappy, and they had a lot more sort of resilience compared to some of the more refined founders outside.
Mm-hmm.
And resilience is a word that keeps coming up again and again for our founders, and you've discussed this as well. So what's your take on that? If you were to give a message to Pakistani founders, first of all, what do you see in them that, number one, you've seen in other successful founders in emerging markets? What do you see as unique in Pakistani founders? And what's the playbook in terms of being from Pakistan, but not just relying on the Pakistani market and having a more regional or a global mindset to becoming a unicorn?
Yeah. So look, I'll dispense some advice, and I'll put the caveat that it's always tricky to be in the advice business, right? Because there's good advice and bad advice. But uh, from my vantage point, I am resolute, like I am positive that there will be unicorns or billion-dollar technology businesses built in Pakistan in the coming decade. Like, I really believe it, and it's basically based on some of the peer demographics and things about the country, but then honestly also informed by the level of entrepreneurial talent that I've seen, right? And look, I'm biased, and maybe I'm seeing a very filtered view here, but spending time with the guys building Bazaar and Abi and Postex and Lamb, like, these guys are amazing, right? Like, I'm not guaranteeing that they will be the unicorns, but I think they all have a shot at it, right? Like, they all have a real shot at building a big company. Maybe it's useful to share. I saw one of the questions in the chat too was about kind of what industries and sectors we're invested into. Because Sherry, it'll give a perspective to your questions about geography also. We're industry agnostic, so we invest in lots of different types of companies. We essentially leave it up to the entrepreneurs, like, you figure out where the biggest companies are going to be built, and we will back you. What that breakdown then is, over the 300 investments we've made, about 200 of them, so about 2/3 of them, are what I would call, regional leaders, right? So these are businesses that have examples in other countries and other regions, but they are the number one e-commerce play or food delivery play or whatever it is within their geography. And my view there is, if you're in a country of 100 million people or more, and there are other factors around GDP per capita and things and distribution and urban density, whatever, but that roughly speaking, you can build a billion-dollar company in your market, in one country. This was true for Indonesia. It was true for Brazil. I believe it will be true for Pakistan in some business models, in some verticals. So it's case specific, but I do believe that someone's going to build a unicorn, $1 billion business, only within Pakistan, right? Without needing any type of geographic expansion. About 1/3 of the things we invest in, to your comment of founders coming out of smaller markets, are what I will call more like global innovators, right? So these are global companies from day one because their home market is small. This is famously, the model and the blueprint for a lot of startups in Israel, right, that sell into the US and sell into other markets. It's the model for Singapore. We have a multi-billion-dollar company in the Endeavor network we invested in called dLocal. That's from Uruguay, right? Uruguay is like a country of 3 million people, and they've built a multi-billion-dollar company from there. So you can build it from anywhere. But my view is that for certain business models, if you're building in Pakistan, there's probably lots and lots of space for you to grow and expand within your country before you necessarily need to go international. Now, if you are going to go international with a model that was built for Pakistan, my view is don't go to the UAE or Saudi Arabia, which has a completely different market and a different consumer. Maybe expand to Egypt, right? Maybe expand to Bangladesh or Indonesia. But that's for certain business models. Now, obviously, for other businesses that are building global from day one, then you want to figure out how to sell into the GCC, into Southeast Asia, maybe into Europe, maybe into the US. But I think they're different, if that makes sense.
Got it. No, that does make sense.
I think the other thing that comes up there a lot, to be honest, is the currency. And people say, like, oh, this is true in Egypt, it's true in Nigeria. I'm trying to expand and get away from our local currency. And look, certain businesses, if they're built that way to serve global customers, will benefit from dollarized or euro or whatever revenues. But other businesses can be 100% with local costs and local revenues. Frankly, it takes a long time, right? It's not going to happen in 1 or 2 years. Like, this is, a 5, 7, 10-year journey to build one of these big businesses. That's kind of the sneaky secret, I guess, of startups. You read the headline of the exit, so-and-so IPOs or so-and-so gets acquired. Behind every one of those headlines is usually a 10 to 15-year journey, right? Like, that's how long it takes to build an overnight success. And I think that my real advice for founders out there is if you really feel you're onto something, stick with it, right? Like, don't give up, because it is a very, very long journey. And honestly, like, we're living in an era where there's more tech media and tech journalism than there's ever been. So we live in kind of this 24-hour news cycle. And I think that distracts us a little bit sometimes from the real work of building companies, which is on a very different timeline.
Right, right. I think well said. Should we move on to some of the questions, because I want to I want to mix a few questions and sort of combine some of the topics.
Please, yeah, I'll follow your lead.
Yeah, so as you said, we meet the brightest and the best of breed founders from Pakistan. We kind of are guilty of living in a bubble sometimes, because we need that optimism. And within the tech sector, meeting the brightest people in Pakistan, doing amazing things, we kind of forget the macro issues and all of the other issues, right? But I think the elephant in the room for a lot of us founders from Pakistan is about the image of Pakistan and the political and economic instability that's like a ball and chain a lot of times. And a lot of founders go abroad, meet investors, and they get to hear this line again and again, that we love you as founders, we love what you're doing, but we're kind of not convinced about taking a risk on Pakistan. If you were in any other market, we would have invested in you, right? That's the elephant in the room a lot of the time. So I think just combining two questions, how do you think Pakistan's overall brand positioning impacts the estimated goodwill Pakistani startups bring to the table? And then how would Pakistan's economic and political situation impact the technology companies' foreign investments, as well as their growth in the next 10 years, right? So that's a worry on top of every founder's mind. I know we're resilient and we have to have thick skin, but what do you suggest we do on that, and how do we tackle that?
Yeah. Well, look, we can't ignore the macro. Obviously, living in the world of the best founders and the best kind of most talented people does give you a distorted view, right? Like my wife actually makes fun of me, because every time I go on one of these trips, I come home and I say, we work in even more frontier markets. We work in Lebanon and places, and I'll say things like, wow, you can't believe how well things are going in Beirut. And she's like, do you read the news? Like, are you literally, like, you live on this planet, right? But so I think surround yourself with people who give you energy, who want to work on problems, who will kind of feed that. Because more than building an ecosystem, I do think this is a movement, right? It's kind of an entrepreneurial movement, and it needs leaders. And the leaders tend to be the founders building the first 1, 2, 3, 4 important companies, right? If you kind of go deep on interviewing Mudassar and Magnus and Abdullah Karim, that's what they were doing, right? They were trying to build a category-defining company that would define the region and put the region on the map globally. And that's possible, right? Now, it's very, very, very hard, right? So if you look at the macro, of course, the politics, the currency, like lots of things will be discouraging and distracting. To your direct question, I think Pakistan has a very bad brand as a country in the eyes of global investors, and frankly in the eyes of sort of uninformed folks everywhere. I think it has a particularly bad brand in the US, right? So we think about the global capital hubs. I think my prediction would be over the next 10 years, Pakistani startups probably have more success raising their Series B in Singapore, Dubai, Riyadh, even London, than they will in New York and San Francisco. That's just a prediction based on the human beings that are there. Now, that said, there are Pakistanis in diaspora living in all these places. And so if you can find a champion and a believer who actually cares about and believes in the level of human talent in the home market, that's how you end up with Kleiner and Dragoneer and some of these guys investing in Pakistan, right? Because there's somebody within that firm who believes in it. So I guess my generic view there is, while you can't ignore the macro, you can't give it all your energy, right? Because you really have to focus on the things you can control as a startup founder and builder. And, that's building your product, solving a real problem, certainly you need a world-class team to do it. And one of the tensions that we saw this in Colombia, we saw it in Turkey, it's definitely true in Lebanon. I think it's true right now in Pakistan. You have a tension in team building because the thing you're competing against for your very best people is them leaving the country. And so, you do have to try to figure out how you can keep a really talented team motivated and excited and behind the mission of what you're building at Bazaar or Abi or whatever it might be. Or we live in 2024, you figure out how to have people who are based everywhere, right? Building towards your common mission. That's an option we didn't have 10 years ago in the same way. So something to think about.
It's already started happening actually. A lot of times it's easier to hire an iOS developer in Ukraine, Estonia, Philippines
Mm-hmm.
than it is to hire one in Islamabad or Lahore, and
Mm-hmm.
companies are doing that, right? Post pandemic. Um, I think just one other thing on the macros and the Pakistan image. Would you like to just quickly give an example of the timeline for Turkey and how Endeavor used to see the
Yeah.
timeline in Turkey? Because I know Turkey is a much more mature market compared to us, but if you just look at the key milestones and the red spots over there, the red flags, I think that's very similar to the way we operate, where we'll have 2 amazing years, and then the third year will be something which is going to be tricky in terms of optics, and everybody else thinking that there's a forex issue, or there's a political issue with India or something like that.
Yeah. And look, I think part of this is you brought up the concept of resilience. We can call this resilience, persistence, determination. But the reality is that in the world of building a company, all kinds of stuff goes wrong all the time. And then the degree of difficulty is amplified or magnified when you're doing it in a more unstable emerging market, right? Because you have these sort of trends of the day of this is happening in politics or this happened with the currency, and it can be a big distraction. And I think Endeavor is unique in this, in that we're one of the only organizations that spent several decades now working in some of these places. Argentina is another good example. Turkey is a very good example. It's chaotic, right? Things are up and down and distracting. I lived in Argentina for a couple of years back in the day. One of the times I lived there in 2001, 2002, they had 5 presidents in 2 weeks, right? So you can have these kind of like, who has a crazier government or crazier, situation they have to navigate. But I do think that instability and that chaos does tend, kind of in a forged in fire way, it tends to create real entrepreneurial grit and like determination. The Turkish example, Cher, I think you've seen this presentation that I've done internally a couple times. Actually, I don't know. Can we show a slide to the audience, or is that a possibility? Let's see. Will it let me do it? Looks like it might.
Yeah.
You guys tell me if you can see it, but I'll tell the story.
Yeah.
Endeavor has literally been working in Turkey since 2007. We've been investing there since we started our fund in 2012. But this slide shows you the timeline in red of all the, excuse my language, all the shit that's gone wrong, right? Like it's been a very chaotic place. Protests, attempted coups, currency crises, the lira has lost 80-90% of its value against the US dollar, really wacko central bank policy. I love Turkey. I love the people. I've spent almost a year of my life there, but it has had a lot of challenges to do this. And yet, in that same time period, you've seen 6 unicorn companies get built in the country. Endeavor has now backed more than 75 companies. We've invested in 14 of them. And in an incredible way, right, in our early investments, the first 6 that we've backed, back from 2012 to 2018, we've already exited 5 of them. And we have an 11x multiple on our invested capital, right? This is Peak Games, Yemek Sepeta, Iziko Foriba, Airties. I share this example for other markets because it's real that in the midst of all this chaos, if you stick with it and kind of play the long-term game, you really can create pretty incredible outcomes. Now, in Turkey, that took a decade. And frankly, we had co-investors in some of those companies that when hard stuff happened in 2015 or 16 or 17, they got out, right? They sold their shares for pennies on the dollar and they said, we're getting out of the market, we're getting out of Turkey, we're pulling out, we can't handle it, we're done. And they didn't have the same kinds of returns as we did. So, one of my messages to a lot of the global investors, we spend a lot of time talking to investors here in California, in New York. I was in London 2 weeks ago talking to, the head of General Atlantic and the folks at Atomico and Sequoia. It's like, look, if you can take the long-term view, emerging markets are completely worth it. But you have to also have the stomach for it because like a lot of shit is going to go wrong along the way. And I think there's an increasing kind of small community of us that really believe in this. Frankly, it's the folks who've made really good money investing in Indonesia and Brazil and India and some of these other places that are like, oh yeah, we can do this, and that's the folks at Tiger and Dragoneer who did the big Series B on Bazaar, right? They're obviously they're also in the news. Tiger is a lot on being public and private and all the things they're doing, but they're global, right? They've seen it play out in other places and they know it will happen again.
Got it.
I know we're coming up to the time and we had a lot of questions in the chat. Sherry, help me make sure we answer some of these folks' questions as well.
Yeah, so I've asked Ellie for about 10 odd minutes extra for the Q&A.
Okay, deal.
Yeah. So yeah, I think the Pakistan image and the perception is not going away anytime soon. That's the thing we need to live with, and it's a long slog where slowly we keep building. And as you said, when the next success stories pop out of Pakistan, that is proof of the pudding that the market is worth investing in for outsiders as well as for locals. And as more and more companies keep bubbling up, the negative macros kind of fade away in the background because people want to get in early into these deals and into these opportunities, right? So it's not going to be solved in the next 2 years. It's a long-term play.
I think that to acknowledge the timeline, for venture capital, I think this works because we're playing for 10x, 50x, 100x, and we're playing 10 to 15-year timelines. So we can absorb a lot in terms of currency and different things. It's much harder to do for international funds playing, let's say, a late-stage private equity game where they're trying to hit a 27% IRR over a 3-year window, right? Like there they have a lot more currency vulnerability, I think.
Got it. I think the next question is, I'm just going to word it myself based on 2 or 3 combined questions, and then the one that is going to be about the MENA region. So I think a few questions are asking an interesting thing is that have you seen unicorns emerge at our per capita income level of $1,500, right? So LATAM is a great example of that. But I think to that point, a lot of this seems very alien to us, right? In a market like Pakistan with our purchasing power and our issues, and even with some of the overinflated valuations in the last 3-4 years, the companies are approaching some of the old established companies listed on our stock exchange, right? And people are just kind of wondering that, how can this startup be worth $50 million or $100 million? So just building on that question, obviously there are gaps in the market, but have you seen other markets like Pakistan build these companies that were not expected at all, and then that started the domino effect?
Yeah, so I think there are examples. And I guess one other framework on it is being a founder and being an early stage venture capitalist, you have to think about where the world is today, but you really do have to think about where it will be in 10 years. And this takes some amount of imagination, but this is the right conversation when you're talking about liquidity. Right? When people say, well, where will the exits come from? There haven't been any exits. Like to some degree, this has to be an exercise of faith that you believe there will be more liquidity in the future than there is today. And frankly, like I can show you guys the chart for our fund. We didn't have a lot of liquidity for 5, 6, 7 years, right? And then we did. And then, we had tremendous results from funds 1 and 2. So I do think the same thing applies when you're talking about the market caps of companies or the idea of can you build $1 billion business if the GDP is X? You have to believe that the demographics are in your favor and that 10 years from now, the GDP per capita will hopefully actually be higher than it is today. Now, having said that, probably the closest comp on GDP per capita today for Pakistan is Endeavor's work in Nigeria. And there we have seen a couple of billion-dollar companies get built, right? Flutterwave, where we invested early, is a $3 billion business. Now that's still private and that's still on paper. And we have a big test coming up in the next 2 or 3 years where we're going to list Flutterwave, most likely in the United States. And we're going to see how the US markets respond to a Nigerian tech company. The same way we saw how they responded to an Argentinian one when we first listed Mercado Libre in 2007. Right? Or to a Brazilian one when we listed Nubank, or a Uruguayan company when we listed dLocal. So, today there's 7 or 8 companies that have come out of Latin America and been listed in the New York, and either NASDAQ or New York Stock Exchange, and they're kind of well received by those markets. But we still have work to do for much of Asia, Southeast Asia and South Asia, and for Africa and the Middle East on how this is going to play out.
Got it.
But I think the thing to think about is you got to use some amount of imagination on thinking about where you can be in 10 years. And it's a bit of a faith-based exercise, right? Because if you're looking for the hard data set on show me the last 10 years, well, it's not there, right? Like we're literally building the future.
Right. Got it. I think I think in terms of the MENA region, a few questions on how we can have offshore sort of back offices in Pakistan and front offices in MENA to attract investors from the MENA region and sort of do that play. Not too detailed a comment on that, but before you answer that, I feel that investors are smart enough to really pick out the structure of the company really quickly. And this may work on the services side, this may work on the solution integration side. But I think if you have your own IP and you're building your own product and you have the majority of your team in Pakistan, your product needs to be really strong in the MENA region for MENA investors to actually invest in you.
Yes.
You can't fake it as if you're active in the MENA region, whereas the meat of the company is, especially in terms of sales, right? So any comment on that? I know that LATAM has also done that, where they're sort of fragmented between different markets. I've seen Eastern Europe do that. But any comment on how founders and companies can tap the MENA market more aggressively?
Yeah. It's a good question. Again, for certain products and services, I do think there's a lot of opportunity in Saudi Arabia today. The world is going to Saudi Arabia. Like if you're thinking of it as a market expansion, kind of can I get customers there? You can build businesses there. Just remember, it's an extremely different customer profile than building in Pakistan. I think what I see more founders doing is trying to figure out how to have a strategic foot in the MENA region for capital and partnerships and things like this. And that, again, I think can be very valid. But to your comment, Shayad, you can't fake it, right? So if you're going to do it, you have to actually really demonstrate that you're committed. Co-founder moving to Abu Dhabi or Riyadh or Dubai, like spending meaningful time there. It's an investment and it's a commitment. The region has its own interesting dynamics going on where it was also fairly sleepy from an entrepreneurship and venture perspective 10 years ago, 12 years ago when we started working there. I've been going to Saudi Arabia since 2013. It's a different place. Like it's a meaningfully different place than when I first went. And for its own part, Abu Dhabi, Dubai, the guys in Qatar and Doha, Bahrain, like they all have these initiatives to try to do things. And so, smart entrepreneurs will figure out the right ways to take advantage of it. But you do want to make sure that you continue to chase after the real problem you're solving and the real thing you're building. right? I think short term, like chasing of, oh, there's this new program in Abu Dhabi, and if I just go there, I'll get this money. It can tend to end up being a detour. It's a distraction in the short term, but it's kind of a detour in the long term. So it's okay if that ends up becoming the roadmap of where your company goes, but make sure you kind of acknowledge and understand the trade-offs, I guess.
Yeah, right. I think
maybe one
just
more comment, because I feel like this veers into fundraising a little bit. My extremely tactical advice on fundraising is you're looking for a match with investors on three vectors, right? Ideally, your company matches on the geography, the sector, and the stage. Now, in the case of Pakistan, it's almost never going to match on the geography, right? And so you wanted to make sure that you really map in a detailed way who are the best investors in the world at my stage of company, at my sector and business model. And if you get that match really right, you might be able to get them to fall in love with you and get over the hurdle of the geography. But only when the match is very, very tight, right? And so even think about MENA, I would go and find the investors who've backed businesses that look like yours in Egypt or in Saudi or in the UAE and say, hey, we're doing this play, but we're doing it for Pakistan. That's probably your highest probability on fundraising.
right. Yeah, I think the Pakistani founder has always felt that beggars can't be choosers, and they've made a lot of wrong decisions getting in bed with investors who were not a good fit. So because the choices were limited, they didn't have the patience, or they didn't have the strategy to wait for smart capital that was betting on them and that was a good fit. So that's been a fatal mistake for some founders in Pakistan. And just the last comment on Saudi is about faking it. Um, if Goldman Sachs is forced to open an office in Saudi to get business, then if you're a B2B startup selling something in Riyadh, then you better be there in Riyadh. You can't do sales out of your call center out of Lahore.
I agree with that.
So yeah, the commitment needs to be there. I think I would have loved to go on, but we need to wrap up in the next 5 minutes. So my final question is, I'll put you on the spot, because other than the timeline, other than the time machine you also have a crystal ball on what works and what doesn't. And before I ask you for your sort of favorite or most high potential verticals that you see in Pakistan, I'll share my own view on this, and I've held this for a while now, and it maybe came out of the negativity that was there, and I kind of tried to convert that into the eternal optimist that I am. I feel that one of the sort of most, I think, high potential things in Pakistan for founders is that the Pakistani market and the next 5 years is extremely predictable for us. Despite, I know Pakistan is seen as a crazy unpredictable market, but I think if you're in Pakistan and if you're in the tech sector and you're building something, especially for the local market, I think one of the great things to follow is that the Pakistani market is an extremely predictable market, because we're not going to get a company that is building, chips for autonomous cars and selling them to Tesla. That is not going to happen. We may get a startup that's doing software for Tesla, but we're not going to get a chip manufacturing plant that's doing autonomous, specialized chips.
Yeah. To the Waves framework, that's wave 4, right? Like that becomes much later.
Exactly. So my view on this is that the predictability is the potential lies in the predictability of the next 5 years, because all of this has played out in other markets. You've got that first wave of mobility and all of that, and smartphones in everybody's hand, and the Kareems and the Bikeas and the grocery deliveries and the basic easy paisa jazz cash. All of that has built the foundation that now you'll have the more sort of complex fintechs coming in. You'll have the slightly more complicated retail commerce players coming in, and the B2B building on top of that layer, right? So that's my view, that it's easy to predict the second layer that needs to be built in Pakistan. But what's your view on that? I'd like to sort of conclude with that where do you see high potential? What sort of verticals? Fintech, I know, is big inside Endeavor and Catalyst as well. I think in fintech in Pakistan, we're at a sort of a critical mass or a turning point where interesting things are going to happen in the next 2, 3 years. How do you see the overall ecosystem, and what are you sort of excited about?
Yeah, I think sector by sector, about 70% of our investing is either consumer, fintech, or enterprise, right? Those are kind of the three big ones. The longer tail, we do have investments in healthcare and education and agriculture and food and beverage, but those are all smaller. I think my view is I'm very excited. I guess I'll say two things. I am excited about kind of what I'll call early wave two in Pakistan, right? Like as we start to get into these more financial service fintech things beyond just payments, I think you're getting a lot more interesting stuff built. I do think there'll be interesting innovation bringing technology to healthcare and education. Those traditionally have been markets where liquidity is tougher. So from a pure venture perspective, I think they're harder. But man, they're big problems to solve and big companies to be built. Right. So I'm excited about everything in that wave two of kind of technology coming to the biggest parts of the economy. I also remain very, very long-term optimistic that this business around figuring out how to best digitize the mom and pop store, right? Like digitize the whole kind of informal SME economy. That's such a big opportunity. We tried to do it 10, 15 years ago in Latin America, in a business that was called Scantech. Fun fact, David Vela is the guy who built Nubank. When he was a kid at Sequoia, he and I did that investment together. It was like digitize the mom and pop stores in Latin America, right? It was early. It was too early. Right. We had a whole wave of B2B e-commerce happen that got well funded in 2021 in 30 different countries. I think those businesses still are really figuring out the right financial models. But ultimately, like that's still a space I think is going to be very, very big. If we could figure out how you digitize kind of the longer tail of the SME economy. And that's a 10, 20-year project that I think we'll keep working on. So I'm excited about that. But the last thing I'll say is ultimately this is running a sector agnostic fund. The entrepreneurs will show us where the biggest opportunities are, right? It's not me as an investor to declare it. Like, where the people see the biggest pain points and problems, and then they go build the businesses, that's where we will go.
I think that's a good filter to follow for the next decade.
We got through the whole hour, Shadiar, without saying AI, which I don't think any webinar this week has had that happen. So I guess I just broke the rule at the last minute. But for what it's worth, my 1 minute on that is AI will be in every business. I'm old enough to remember when VCs were all hot on investing in mobile and they put it on their website. We invest in mobile companies. And then, of course, that just it becomes a tool. Every company is a mobile company. Every company in the world will incorporate AI into their business over the next 10 years. Lots of them will do it over the next 24 months. But I don't think for our markets, it will be a standalone category of investing per se.
True. Sounds good. Before we wrap up, Alan, any sort of open-ended advice to? I'm sorry to the people whose questions couldn't be accommodated, but just a wrap-up comment. Any high-level advice to Pakistani founders? Just a pat on the back, or any sort of parting comments on fundraising, or going through this tough phase in terms of a slow market?
I guess in entrepreneurship on some level is an exercise in radical self-belief, right? You have to do this thing that everyone tells you is impossible. The Reid Hoffman quote on this is, starting a company is jumping out of an airplane with a backpack full of silkworms and hoping they are overachievers, right? In terms of them making you a parachute in time before you hit the ground, right? A tremendous amount of risk is required to take these things on. It's why I think being an entrepreneur is more of a calling than a job. It's well documented, like the tourist capital that came into the market in 2021. Candidly, there's also a lot of tourist talent. Like there's people who came to a startup because for a little bit it was cool, and they're going to go back and work at a big company or do something and work for the government or do whatever. For the people who really feel compelled to do this, to be entrepreneurs and to work on these teams and work on these companies, I guess my main comment is keep the faith. Like it is totally worth it, but it is a very hard long-term game. And those of us who've kind of seen this movie before in other places, we know this is going to happen. We also know more startups are going to fail. There's going to be more bad headlines. Some of the early venture funds that get started might go out of business. Like that's all going to be part of the ecosystem development. And it's really hard, if it's your startup or your venture fund, like obviously that's very painful. But what will happen is talent will consolidate around the best companies and frankly around the best VC firms. And you'll end up with hopefully 3 to 5 really great venture firms in the country, eventually more than that, but in that first wave. And you'll end up with 6 to 10 companies that have a shot at really breaking out. And you see that in Silicon Valley too. You get these waves where there's proliferation of tons of startups, and then a bunch of them fail, and then the talent all kind of gets sucked in around Stripe or Airbnb or whoever kind of is the next big company, and then they work there for 4 to 7 years, right? And then they have an exit, and there's liquidity, and they go back out in the world and plant a bunch of new seeds and start a bunch of new things. So if you've seen it over and over, it's easy to say like, oh, we're in this stage of the cycle. But if it's the first time, it's hard to have that perspective sometimes. And so I guess my main advice is like, keep up the good work, keep up the hard work. It will be worth it. Like we're going to build some very big companies in Pakistan. And come 2030, we can all be celebrating,
Inshallah, as we like
Inshallah,
to say.
Inshallah, exactly.
While we slog away.
Thanks for your time, and to the 50 people who stuck around for 20 extra minutes, thanks for listening.
Yes, especially for the questions. I think that was the most interesting part. Thank you, everyone. Thank you, Alan, for your extra time as well. We'll be doing this regularly for the audience that's listening in. And some of the questions that were missed, we'll try and answer these offline, as Ali Fahad promised you guys. So signing off now. Thank you, Alan. Talk soon.
Very good. Thanks for your time. See you, everybody.